Stock lending, or securities lending and borrowing, as we call it, is a very simple proposition. Securities that you hold on the stock exchange, be they stocks in companies or bonds issued by corporates, are assets that you can actually on lend to a borrower for a specific period of time, very specific period of time, during which they use them for a trading strategy. And at the end of the period, or even before that, you get your securities back. Why is this important? You might be an investor who is holding your assets for the long period, for the long haul. Maybe a pension scheme that has a long horizon and obligations that are going to come about way in the future. And you're holding a security that is actually, probably not giving you the kind of returns that you want, but you know you need it to have it for the long haul. So you can lend them for a fee, just like the way banks lend money. They get a fee or interest income for that matter. And you then get your shares back after the end of that period. So that's basically what it is. It's very simple. It's just the way you can go to a bank to borrow. Borrowers in the market, people who don't have the shares but need them for particular trading strategy, can actually borrow them and return them, pay them back at the end of a specific period. We have what you call bilateral arrangements, where I, as a borrower, seek out a lender or vice versa on a bilateral basis. And we agree on our terms, we sign agreements, and then we consummate the transaction. That is traditionally what happens, but the one that we're introducing as the Central Depository and Settlement Corporation is what we're calling a screen-based model, where potential lenders, will give instructions to their central depository agents that I have shares available for lending. Those shares will be then put on a board within our system, within our platform, and potential borrowers will be able to access them also through their central depository agents. And the system or our platform will then match the borrowers and the lenders. So there's no need now to go seek out a borrower or lender, whichever side of the transaction that you're on. We shall all do it for you. It's important to note that one can still do a bilateral transaction. The law in Kenya allows for that to happen, but we felt as a CDSC and the operator of the depository that it would be easier, we could get more uptake and adoption if we encouraged a screen-based model, just like what happens on trading on the secondary market. In the event that the borrower is unable to return the shares because he cannot find them in the market or is unable to buy them from the market, we will be holding collateral from every borrower. So to be able to borrow, you have to provide a cash margin of 110% of the value of the share. If I'm not wrong, the Nairobi Securities Exchange launched day trading in either November or December last year. It's a very recent thing. So for a period of about 60 days to have done 700 million, I think is very encouraging. I attended the launch at the Securities Exchange, and I could see there's a lot of interest, especially from your high net worth and retail investors. But of course, we need to scale up. Now, we believe that the securities lending and borrowing itself could be a catalyst for that. Because if we get more people to be able to borrow shares, you're borrowing shares for a trading strategy. So either you want to participate in day trading, you've seen there's some value in a certain security, and you'll be able to pay back, or you also want to short the market. So is basically where you feel a particular share is overpriced and you think it's going to go down. How do you take advantage of such a strategy? It's going to go down, and you don't have the shares. So what do? You borrow them, sell them in the market, wait for the share to come down, buy them at the lower price, and return them back to the, So there are numerous strategies. So I think once securities lending and borrowing takes off and we get enough uptake, I think it'll spur a lot of these other markets, including the derivatives market. They're all somehow related in that it's all about trading strategies. It's either protecting your portfolio, it's either taking advantage of a perceived weakness at a certain point in time. And so we believe they all have to come together. So Akiba was not necessarily a product of the central deposit. This was Ministry of Planning, and what we do know is that they, and I think Director General in that area has discussed this even with the media. They will be issuing what they are calling Akiba 2.0. So Akiba 2.0, I believe, was fairly successful. We were able to reach thousands of Kenyans. They were able to save and get their money back, no questions asked, interest and everything. In that perspective, it was fairly successful. From the communication authorities that if a number is inactive for a certain period of time, it is recycled. Yeah. So we were very careful not to pay people who did not participate in the bond for numbers that had been recycled. I think that was the biggest issue. So we are trying to work it out with the MNOs so that we are able to trace the original buyers and not the current holders of those numbers. That's where we are. So the money is still safe. It is intact. It is sitting with the paying bank, if I can call them that, which is NC. But we're trying to iron out those things to be able to pay. But I would say the majority of it's a very small number in respect to the whole bond or the money that was collected by the government. So we're working on that. There's a technical reason as to why we have hesitated on doing that. There are several. One key one is the fact that our market sort of sits in the middle of the trading day on a global perspective. We open as the markets in the east are closing, and we close as the markets in the west are opening. And sometimes the cycle requires for settlement, transfer of funds from those jurisdictions. So we found that T+3 accommodates everybody. But you can't accelerate trades. We can accelerate particular transactions, which we do regularly. So if there's a trade where the recipient, the seller feels that they want to accelerate it, it can be accelerated. And that's how we're even able to do the day trading, because those trades will be settled probably you can say as we go along during the trading session. So it is possible to do it, but for the general market, we think we'll continue with T+3 until maybe we're able to deal with the issues of transfer of funds.